What's up? Thank you so much for taking your time to learn about how you could invest and potentially become wealthy in the next few years. And I'm here to tell you how you can do it. That is easy. I'm here to debunk certain things that I thought you had to be, or what was required to be an investor. And hopefully what I share resonates with you and helps you begin to think differently about investing. So let's dive into it. This is not something that I've wrote down or had bullet points for, which I probably should. But I wanted it to be natural, as if you and I were just talking, as if you were sitting right across from me right now and we're having this discussion. So a little bit about me. I got into cryptocurrency about late 2017, early 2018, about that time frame. And when I say got into, I mean I started investing. I had knowledge of crypto, had very little knowledge of investing. As a matter of fact, to start off with some of my assumptions, I honestly thought it was a white man's game, that you needed just a whole bunch of money. You needed a whole bunch of knowledge and education about investing, especially with around taxes and I just wasn't raised to know a lot about investing at all, or about credit, savings. And I think that speaks to a lot of households, in particular, low income families. And if we put another divot on that demographic to say low income Black families, that's not the conversation I would have to say in most homes that are being had, where there's talk about you have to have good credit. This is how you manage credit. You have to invest. This is how you invest, and saving and things like that. So I didn't have that knowledge or education growing up. So it really hindered me in the opportunity of when Bitcoin came, when it came in about like 2010. I had the money to invest. And if I looked at how I was then, and I have to tell you, I mean, my thinking was so different. Like, I worked, I had a good job, but I almost felt like I had to spend my whole entire check before I got paid 2 weeks later. Instead of just either saving what I didn't use or investing what I didn't use, and just, establishing some overflow, like, hey, I'm spending money this from my check 2 weeks ago, opposed to just starting fresh. But that was my mentality, and I would just waste it. I would just spend on whatever until I got paid again. So about the time when Bitcoin came in, I had money. And if I thought, of how I was then, I would have probably invested about maybe $500. Maybe 500. If we want to go, a lot more conservative, maybe 300. But just money, it was just, I was just wasting it. But I had an interest in the technology and thought it was pretty cool, digital money. So, and I know had I done it then, I would have been a multi-millionaire now, or before, when it was at its all-time high, especially when it was like 60K plus. So, so what I like to do is kind of just touch on just investing. Like, you don't have to be super rich. You don't have to be rich at all, especially now. Things have changed so much with companies like Robinhood. There's no affiliation. Any company or investments that I bring up during this conversation, there's no affiliation, and this is not financial advice. We're just having a conversation. So back when I lost my train of thought. All right, here we go. So Robinhood, companies like Robinhood, they allow you to do micro investing. And what that basically means is you have a stock that's worth $100, right? On a New York Stock Exchange. It's worth $100 per share. Yet you only have $10. Well, you can still buy $10 worth of that $100 share and still be considered owner of the company. You know, it's just that you're not buying a whole share right out front. So I didn't know that. I didn't know at that time how that I could do that with Bitcoin. I didn't know any of that. So because of my lack of knowledge, unfortunately, it didn't make me the multimillionaire that I've always still, continued to want to be. Now with a lot more maturity, a lot more knowledge, and a promise I made to myself in one of the lowest parts of my life. I made a promise to myself when I was going through some real tough times that, once and I didn't know how at the time, how I was going to get just the windfall of any source of income, that I promised myself I would invest. And I did just that once it happened. And I haven't stopped investing since then. So what I want to do is kind of walk through just really kind of debunk that first of all. Yes, if you have $10 right now, you can invest. You can become part of a company, as far as part owner. You can buy stocks in Tesla and Amazon. You have that ability now. And if you're sitting on money, if you have money stuffed in your pillowcases, under your bed, in a bank account, especially in a savings account, because in a savings account, the APY on it is ridiculously low. And they in turn take your money when you put it in and they invest it and they make tons of money off your money. And nowadays they don't even have to. That before they had to keep at least, I believe, like 10% of your money on deck. So, that they had it there, they couldn't use it. But banks now, new law passed where they can take 100. They don't have to have any of your money on deck at all. But as long as we go to the ATM and pull money out and it's there, we're happy. But they're making tons of money just on interest, with what we work hard for. And we then take that energy and time and deposit it into the bank. And then they use our time and energy, and they make more money, taking our money to fund loans for mortgages that they have, for little loan packages that they have. It's ridiculous. But just to just to give you just a little history on banking, on the banking system. So if you're just holding money, what's important is to you gotta get into investing. You have to change your frame of mind. So as there was two me's, the old me, and then of course there's the current me. So I wanted to illustrate, if I had $10,000 come down the pipeline, and the route that 10,000, the life cycle of that 10K through my old self would have been, I would have said, thank you, Jesus. I would have been very thankful, and I always, put God first. So in any scenario, old me, new me, I would have been thankful for the windfall, and then I would have went on a spending spree, spend as fast as I could, right? Because I've been programmed, unfortunately, by my parents, to live I guess like in scarcity, just live, just barely having, So if I have a whole bunch, it's like my frame of mind was, all right, you got to hurry up now and get back to that scarcity point, which, like I said, is insane thinking about it now. But that life cycle is there now. 10K comes out of nowhere. My frame of mind is different. My process still begins with the same. I'm thanking the Almighty God, for his blessing. But my prayer extends to that I am guided and led to how I spend, how I invest, this his money, and always giving him thanks. So that's, the first and foremost thing, right? After doing that, I detach myself from the money emotionally. Okay. So a lot of investors, tons, probably, if I had to guesstimate, it's probably about 90% of the investors out there are emotional investors. Okay. So it is very important that there's two things you want to establish before investing is to find out what type of investor you are. And you want to detach yourself emotionally from the money. Now, or the money, of course, that you're planning on to invest. And it's important because the market goes up, the market goes down. It's just a roller coaster, and people who are invested emotionally ride that roller coaster. They sell when they shouldn't, they buy when they shouldn't, and that's the way the elites want it. Okay, so you want to transform your thinking and basically do what the elites do, and we're going to cover that. So you want to find out, detach yourself from the money emotionally. So you don't want to invest what you are. You only want to invest what you stand okay to lose. Okay, so it's, if it's $10, I wouldn't want to do it $10. That's two Starbucks coffees, and I mean, okay, I can do $10. If that's where you want to start, but that's the frame of mind you have to have, really, no matter what entry point or how or whenever you're investing. It's just you invest what you can stand to lose. Find out the investor that you want to be. So what that means, there's, and I'll just mention just two, right? So you have like day trading. And day trading, I believe, is probably kind of like the Forex trading that you hear a lot about. But in day trading, you're there sitting, looking at the market, looking at graphs, looking at the ups and downs of the market, and buying and selling, and just kind of timing it or trying to time it. And there's software available that helps, but you're constantly having to look at it so you don't miss out on opportunities to make money. You can make money in day trading, but your time is there sitting looking at a screen all day long and buying and selling, buying and selling, buying and selling. So it's quite cumbersome. But the alternate trading method is just a long-term investor. For me, long-term investing fit better for me because I didn't have the time. I have a family, I have, work, I have things that I want to do, and I just never saw myself that focused on trading like that, to where I have to sit in front of a screen all day. Just like you see in the movies with the stock market, and people got two phones to their heads and they're looking at a ticker on the screen above, and they're just buy, sell, buy, sell, 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 buy. So that's not how I saw myself investing, right? When you detach yourself emotionally, becoming a long-term investor just marries each other. It's the best thing ever. And so what I mean by, of course, long-term investing, I'm sure it's self-explanatory, but it is basically, there's some due diligence you have to do. And then you decide after doing the due diligence how you want to invest your money, and you sit back and wait. You hodl. Hold on for dear life, HODL. You hodl. Just hold, just wait. And over time, you'll reap the benefits. But as I stated first, you have to do your due diligence. So once you establish the type of investor you would like to be, which most people listening to this should probably are steering towards the long-term investor. So once you establish that, it's now the exciting part, which is not so exciting, right? But it's the due diligence piece. It's your money, so you want to make sure. And let me correct that. It's God's money, so you want to make sure you are doing the very best with it when you're doing your investing. So even in your prayer, that you are led to the right companies or the right opportunity to invest your money in. And then you, of course, just a big cycle. But never, please never forget to keep him in it. So you do your due diligence. You can go to different exchanges and you see their top 10 performing companies, and that's fine, right? That can help you. But before we get there, one of the most easiest steps is like, where do I invest? You have that, I have money. Okay, I'm not gonna be emotionally tied to what I invest. However, who do I invest in? Right? So the one method is just look at your buying habits. Who do you like doing business with? If it's Chick-fil-A, great, right? I share the same sentiment. However, Chick-fil-A is not a publicly traded company, which sucks. But that's the route you want to go. Okay, just for example, I love Chick-fil-A. I love what they're doing. I know their owner doesn't operate on Sunday because they're a God-fearing owned company. Cool, but they're not publicly traded, unfortunately. And, a lot of the companies that I like that I actually do business with are not publicly traded companies, which is fine, right? So you start thinking about, okay, so what else? I mean, there's places you like to eat. There's places you like to shop. How do you spend your money? Where do you spend your money consistently? With what company? And usually that is the company you want to invest in. If you like traveling, go ahead and invest in the airline. If you, like for me, I like Tesla. I use Apple products. So I have small investments in those products. So the first thing you want to do is think about just like, how do you spend your money? Right? And there's millions and billions of people, at least millions and billions of dollars that have the same characteristics that you have, and they spend their money there too. So you can start there as far as where to invest. As I was starting to say before, you can also go to an exchange, and in crypto, it's hard out there because there's thousands and thousands of crypto digital assets out there that claim to be legit that are not. So you do your due diligence. You can even look at just the top 10 on any crypto exchange, and you pull up the company, read their white paper, and what you want to do, with any really investment outside of, if you're investing in companies that you just normally do business with all the time, but you want to look at who's the CEO, who are the partners, who's on the board, who is the marketing person, what is their history. I said fun, but it's necessary. This is the boring part, but becoming a multimillionaire and creating generational wealth, in a lot of cases, aren't this exciting thing, unless you're just a, entrepreneur that has the next best thing, and it's fun, right? And when that's the case, and when there's a demand and not a whole lot of supply, and price goes up, and you're just living the life. But if you're an investor, knowing, hey, I want to create generational wealth, I don't want to live how I've been living for years, and I want a better life. Going forward, how do I do that? How do I do that with investing with what I have to have more disposable income than I have now, so I can do things, travel, and just freely just do things, not work for someone, retire early, whatever the case may be. So back into your due diligence practices. You want to make sure, you're looking at the CEO. You're looking at their credentials. Is this a legit company? What problem, which is very important, what problem are they solving? What industry are they disrupting? What changes are they doing? You want to make sure that you get into the meat and potatoes. And then once you find a company or two or three, and you say, you know what? I feel good about this company. So no matter what their ups and downs, I know they're new and they're going at it and they got goals and they're posting and they're being transparent. I want to go ahead and invest in this company. And then I'll dollar cost average in, or, I'll invest, at certain price points, or every paycheck, I'll make sure in this company or companies I've done my due diligence on, I will go ahead and, take X amount of dollars every pay period and put towards it. Whatever that commitment is, keep in mind, of course, as I stated, the emotional attachment. You want to detach from the money. You don't want to invest more than what you don't mind losing. Wouldn't hurt the bank. Of course, you don't want to invest money that, you need for rent. You need for your car. You need to eat, for your necessities and overhead. You do not want to play with that pot. Okay. So once you get in and you found your company or companies and you made your investment and things are going okay, right? Things are going good. And actually, the market is going up and you make a profit. So say, for example, you invested $100 and whoa, we're in the crypto space now. So and it can shoot up, 10x. So you're over here like, whoa, I have $300 right now. The first thing, and again, none of this is financial advice, just suggestions of what I've heard, which resonated with me, and I'm sharing with you. So a lot of people, the smart investors that are, new, and it's just wisdom period, right? Even for the elites. But if you're first getting in, you make a profit, and that profit is more than what you put in to start. Take profit. Take out what you put in. And then what are you doing? You are now only investing or playing around with house money. You're only playing with the profits now. And what I mean playing is you play into either hold, or if you see anything else that's promising and you want to take that profit from what you invested in and move some of that profit to invest into another space. But you're playing with house money at this point. That $100 you put in, you have just paid yourself back, and now you have nothing but profit. And then you make your investment portfolio based off of that. So to me, that would be, the more responsible approach to investing. Now, of course, not every asset, not every company is going to go up that much. And it may be a slow climb to when you're able to take out of your original investment. But, or you just, hey, I'll just keep it in. Whatever the decision. Again, these are only suggestions. So now that you have this portfolio established, you consider yourself a long-term investor. There's going to be fluctuations in the market. Now, this is where the game gets a little fuzzy. You say it's unfair. It's just the way that it is. And you have to know the game so you won't get played. That's basically what you have to do. So when things are up, you do the opposite. You go down. See, for me personally, I was never the one. I was always raised not to follow the in crowd. Analyze the situation. Is this the way the whole mass is going? Is that something you really want to do? Why are they doing it? I was taught to analyze and really flat out, just if there's a whole bunch of people just doing it, they're not thinking, they're just doing it. You don't just join. You sit there and you sit back and say, why are they joining? What is this? Is it new? And I'm really kind of talking to like vaccines and stuff and what's going on, So, you really have to take a step back when those things happen. And the same applies to investing. So, and you have everything going up and everybody's, I'm going up. And people are waiting, to take profit, I don't know, but you're never going to find the type. You don't know when it's going to come back down again. You never know how long it's going to stay down and go back up. You'll just never 100% know the exact time of when that will happen. So my suggestion to you is that when, if you want to take profit, just have some exit points, an exit strategy, all right, I put 100 in, it went up 3x, so it's 300 in. I'm going to take my initial investment out, so I have 200 in profit. This thing is still climbing. If it goes to 500, I'll just take another 100 out. So during these exit strategy points that you come up with, what you may want to consider doing is when if you take out 100, put 50 aside, spend the 50, do whatever you want with the other 50. Now the 50 aside that you take out at different exit strategy points as your asset is moving up in price, it's going to come down. It's just going to come down eventually. And at that point, what you put aside, you go back and buy it to get more, to increase the position that you were in prior to you taking it out. So that's the game. But the game is a little bit deeper than that. Okay. So we have these elites that have a very huge position in a lot of these assets. So they produce FUD, right? So FUD is fear, uncertainty, and death. And then FUD, what they do is put out news articles or something about this company, and people who are emotional investors, and like I told you, about 90% are emotional investors. What they do is they freak out. Oh my gosh, they're a terrible company. And they start selling. Oh, no, I know it's going to impact the business. I don't want to lose anything. Sell. So they increase the fear, which causes a reaction to sell. So people are now selling their position, selling, so they don't hit the bottom and lose money. So as they're selling, the fear worked. Elites are like, yes, it's going down. What do you think the elites are doing? Buying. They're buying the fear. As it goes down, it plummets, and it's plummeting because everyone's selling. And they're like, yes, keep selling. And then it gets to a certain point, then they will sit there and start buying into it again. Oh, it's a great company, kind of selling those stories now. Oh, so as it's spiking up, now the people who sold are like, oh, crap, it's going up. I need to buy back in. So, of course, them buying back in, the elites, so them buying back in, the elites are sitting there like, all right, great. Now it's going up. It's FOMO. Everybody's FOMOing. You're going to hear this. FOMOing is fear of missing out. So people, I don't want to miss out on this opportunity. So buying back in, and they're buying this asset or buying back in to which the elites own a whole lot more that they bought at a crazy discount because everybody was selling. Now everyone's buying back in as it's going up, and the elites are making so much money now. It goes all the way up and spikes up. And again, you never know when the top is. And as it's going up, elites are taking profits. Because like, look, hey, I just bought this 0.001 cent of digital asset, and now it's worth $5, man. And they're selling. Or I'm sorry, they're buying at that time. And it goes back up. And that's the cycle. That's the market impact, market influence that the elites who carry large positions or large positions of power or large positions in the asset itself. They have a large portfolio in it where they can manipulate. It. So there's not very many of us who play the same game. Because like I said, there's more people that are investing life savings and are investing their children's college fund, and they're doing these things. And then because they didn't do their due diligence and they didn't really go through a company to understand, what's going on, they lose their money. Just like that. And now it's a whole stress thing. And unfortunately, it comes with depression and suicide. I mean, but you truly have to, again, it's that detachment emotionally and doing your due diligence before you invest. So, I can stop here, and it's been about 30 minutes. We can stop here, but that's essentially the basics of investing, and I hope it was helpful for you. Thank you. Hey, everybody. Also, just a quick note. It's very important that mental health in the space of crypto, in the space of investing, is very important. If you haven't made certain adjustments in your attachment to the amount that you're investing, And again, I keep reiterating, just disconnecting emotionally from what you invest is a big part of it. But we all are going through something. So please don't hesitate to call someone